Well, I will start with, since it's on my right first, with Mr. Tourné, who is the CEO of MEROS Wealth Management, and he's more into the wealth management and private banking business. I think Greece has been going through some tough times, and some people say the economic outlook is going to be gloomy for another 5 to 10 years. So the first question that comes to mind is, do you think there is any future for wealth management in Greece, given this outlook and the economic situation right now? And if you think so, why is it so?
Well, I certainly hope that there is an outlook for wealth management in Greece. Actually, you could make a case that there is even a better outlook for wealth management in Greece now. Because basically, what wealth management is a way of managing uncertainty and volatility. And volatility is certainly something that we have plenty of right now. So all the more reason to have wealth management here. Another way to answer this question is to go from the angle of onshore wealth management versus offshore wealth management. And to ask the question of whether people should have money in Greece rather than having it in Switzerland or in Luxembourg or wherever else. And my feeling is that onshore wealth management does things that offshore doesn't do. There is a proximity, there is a contact with the client, while the range of products that is offered is exactly the same between the two. So there is something in onshore wealth management that makes it necessary no matter what. So from that point of view, yes, there is a need for wealth management, and a continuing need and an increasing need for wealth management due to the present circumstances.
Some people may say this is so during normal times, but we're not going through normal times at this point. And some people are very concerned about the safety of their money.
Mm-hmm, absolutely.
So do you still think that onshore is better than offshore?
Absolutely. The thing about onshore wealth management now is that it has to evolve. What we are doing for our client is not the same thing as what we were doing 2 years ago, or even 1 year ago. First, because the range of products that are proposed, and I'm speaking for us, but for any bank in Greece, the range of product is completely different. What we are proposing now is products that are capital guarantee from very often foreign institutions, structured products that have short maturities, mutual funds that are themselves capital guarantee, money market funds, those kind of very secure aspects of products. But more importantly than products, the service offer has changed. And from that, I mean, for example, the fact that the client now in Greece demands to choose the custodian of the assets. For example, we are proposing, and other banks also are proposing, custodians set out of the country. Mm-hmm. And that is right now a demand of the clients. So from that point of view, you can provide to clients product and services that make sure that the money is safe while still being in Greece.
Yeah. Let me ask you this, because now we are in a state of crisis for like 2 years and something. But before that, it was a different time period. So I want to ask you how the preferences of the Greek private banking clients have evolved during this period. Do you see any change between what they preferred before the crisis and what they prefer now?
It's day and night. It has nothing to do. I mean, everything changed completely. what I saw when I arrived 4 years ago in Greece, so before the difficult times that we are going through, was a lot of appetite for private equity, for hedge funds, for more speculative investment. And now we are going not only for capital guarantee by foreign banks investment, but we are going also for specific service offer. I was mentioning the second custodian, but that's not the only innovation that we had to go through. So the outlook, the content of the wealth management has changed completely, but it's still there.
So it's more like the Greek clients normally have become more risk averse in choosing products from what I...
Absolutely. They have become more risk averse. Obviously, another element has changed is I've been working in different areas of the world.
That's the other thing I wanted to ask you, because you said that you worked in Asia and also the Middle East for a few years.
And the United States also.
Okay, so I wanted to ask, how do you compare do you see any differences between what the Greek clients want and what the clients in those geographical regions wanted at the time?
There is a huge difference, and it's kind of what is making this business very interesting is because every market, every country has its own very individualized business. And what's happening in Athens is also different from what's happening in Thessaloniki or in Crete. So, but as a whole, what I've seen 4 years ago when I arrived is this emphasis on Greek securities. I've rarely seen a group of customers as attached to their own national securities as here, which was very interesting to see. What I see, to come back to your previous question, what I see is that now our customers tend to diversify away from Greek securities, obviously, and first going into supranationals like EIB, bonds, but now testing areas that we were not seeing much before, for example, Asian real estate or commodities, which were not that much touched before.
You mean REITs, right? You mean REITs?
Not necessarily. You have other ways to go. You have the Japanese REITs, obviously, but you have also mutual funds that are investing in, for example, construction companies in Hong Kong, or you can have ETF following certain indexes. So you don't always have to go through REITs.
I think I told you at some point that I thought that the Greek private banking clients like discretionary, like to manage their money themselves. They're not really that fond of, and you told me that this is not a unique Greek characteristic.
It's the same. I mean, it's like, basically, most people don't like to have their money managed for them. And it's the same everywhere in the world. I mean, it's like you go to Asia, it's the same. I mean, the share of execution portfolios versus discretionary portfolio management is roughly, you have 80% of your portfolio in execution and the rest in discretionary and advisory. So it's the same everywhere. Where you see the difference is on offshore wealth management, because there, obviously, clients it's more difficult to have contact with your relationship manager when it's in Switzerland or when it's in Singapore, and you're more led to and trust that person in managing your money. It's simply because you cannot be as active as you are when you are in your own country. So from that point of view, it's roughly the same. I mean, traditionally, the share of discretionary portfolio management on an onshore entity is rarely more than 4 to 5% of your assets.
Okay, I think we'll move on to another area. I will go to Mr. Lysimachou, who is the general manager of insurance business in Piraeus Bank before coming to risk management and so on. So I would like to ask you this question again. What is the future of bank assurance in Greece, given the economic situation? I mean, disposable incomes being reduced, unemployment going up. What is the future of bank assurance in Greece?
Yes. You know that the bank assurance is a new activity for the banks. Officially, only the last 10 years is coming to be a product, I mean, in the area of the products of the bank. And I could say that after this period, the activity was very successful because about 35% of the market share belongs to the banks. And I speak for life insurance business mainly. So we believe that the development will be in front of us, and nothing will, the influence of the crisis will be only for some years, for two reasons. One is because people trust banks, and trust for the reputation, for the infrastructure, and for the products. That the products are very easy to understand and, of course, easy to sell and easy to buy. For the time, of course, the decrease of the production, the premium production, is because the banks do not promote the single premium products. Single premium, and this is obviously because the banks needs their deposits, and they do not sell products of other companies, in some cases, as you know, the banks, they cooperate with insurance companies, and they have not their own insurance companies. It's one of the reasons. So, although we have the decrease about 10% less than in the market has about 22% now in the life business and the regular products business. In the banks, we have not more than 10%. So I'm positive for the future.
There is, at least there was some kind of competition between the pure insurance companies and the banks, at least in the past. I don't know what the situation is right now. Can you tell us more about it? Because, you know, they were trying to grab some market share, I guess, and there was some kind of friction. Where we are at this point?
Yes, in the past, this competition was worst, and I think was a conflict, because in the legal environment was not very clear for the banks to sell the insurance products. And but these 10 years, I can say this last period, I can say that it's a pure competition. I mean, it's a market competition. It's not under the table competition. I mean, and this is because the market of the banks is it's different, and I can say that the banks, they have structured a new piece of the pie that did not exist in the past. And this is because all these people, I mean, the new clients, the loan holders mainly, they have the opportunity to cover by a product, a life product, a regular life product, in order to protect their loan and their property, of course. This was something that the original, say, insurance market, it was not easy to approach it and to succeed. To give a product, insurance product. Of course, we have some common area, and this is something that we will face, and all in European and the other countries who has a mature bank assurance system, they do face, and there is no problem. It's I can say it's a competition, and they give the solution, they give the problems, they solve the problems in using the tools of the market, new products, attractive products with good prices, good service. It's very important that, yes.
Let me ask you this. Over the years, we've heard people from the insurance business saying that the Greek market has a lot of growth potential, but this growth potential has not been realized so far. They always point to those insurance premia as a percentage of GDP, saying that the Greek insurance premia as a percentage of the GDP of the country is much, much lower than the average in the EU. And in the past, they used to say that one way to converge towards the EU average was, by offering tax advantages to the people who will buy those products. Now, given the fiscal situation of the country, we all know that this is not going to happen. Contrary to that, what we've seen is the opposite. On the other hand, we've seen that there is the social security system of the country has been reformed. And some people say that perhaps this opens a window of opportunity for the Greek insurance business, private insurance business, to boost those insurance premiums as a percentage of GDP to the EU average. What do you think?
A lot of questions. 30 years ago, when I introduced myself to the insurance market, I joined the insurance market. The percentage of the premium volume comparing with the IEP, it was 2%. Or 1.9%. Now it's about 2%, 2.1%.
10 years later?
Yes, 30 years ago after. I remember that the maximum was 2.4%. And the less, between 1.28 and 2.4%. That means that in the same time, Portugal, who was very close to us, was less than 1.8%, 1.7%, was less than we are. And now Portugal is about 5%. The main percentage in the European Union is 8%. And we are still in the same level. What happened? We believe that in Greece, there is no insurance consciousness, as you say. And this is because people trust the social services as social security. And from the other hand, the insurance market was not very strong. I mean, the investment probably were not the appropriate for development, a fast development in this market. Mainly, this was the reason. And now things has changed. The last 5 years, no, the last 10 years, after the reformation of the security system, people understood that they need a new product, I mean, to support the pension scheme, and a new pension scheme, say. And they start to, insurance companies and the banks start to sell pensions, private pensions, and single premium products. Now, as you said, things have changed because of the crisis. But from the other hand, we have worst conditions for the insurance, for the national insurance, for the social insurances, and from the other hand, people has no money to pay. So, for this reason, we believe that people, when start to have money, they will pay. They will pay to buy private insurance and private pension mainly. It is not, we believe that will not any problem because of the tax differences. Why? Because the main argument for insurance and private insurance is that the performance is, the technical performance is stable. It's between 2.5 and 3.3% for 10 years, 15 years. And because they have to pay, there is a mechanism in order to pay every month or every year the money and the premium in order to stay in the area, stay in the product, in the contract, I mean, of the insurance policy. This is the difference in comparing with a standard banking product, deposit banking product. And we believe that from one hand, as I said, the differences in the social services system, and the other is the performance. We believe that it's people when start to have the money and the income, I mean, they will start again to pay for insurance, private insurance contracts.
So you think that private insurance will be boosted because people will try to complement their pension with a private insurance scheme. But on the other hand, you say people don't have money to do so, at least not all the people, they don't have that much money. Do you think regulation, by the way, of the industry has played a role in the fact that it has not really live up to the expectations as far as growth is concerned? The regulation of the industry.
You mean generally speaking, or?
Yeah, in general. I mean, we've had some incidents. That's why I'm saying.
Yes, the main change in the regulation area is that the Bank of Greece now is the authorization for the
it's a regulator now.
Regulator for the insurance market, and this is something that makes the reputation of the insurance market, I mean, in a better level, of course, the new regulation is the Solvency II. Who will start from the next year, from next October, we believe, and it's very tough for the insurance business. We believe that if the existence of the new regulator, the Bank of Greece, and the new regulation system, the Solvency II, will change things. I mean, will boost the market to be more trustful. I mean, to develop a better services system and better products. And of course, to avoid any case as Aspis Bank case, Aspis insurance cases, who were very, very, very bad for the insurance market in Greece.